DMBI.com. This is John's report. It's for the 2nd of January. Happy New Year to everyone. Hope you had a great start to it. Thought we'd take a look at where we're at here for the year of last. Minus 19%. I think it was actually right around that 20% number. So that was a pretty significant trauma for quite a different level of asset classes. I mean, they went across the board. It was a nice move off the lows to push back up right around that 3860 algo level that we had been pointing out on the 5K charts for quite some time. Um, Positive element to end the year, and we've got DOC green over, still the orange stuck between red and cyan, but virtually no shorts at all within this setup here. I mean, we're -3 on that one, so it's pretty weak from that standpoint, but also no significant long-term buyer. But that's easily turned around because you've got midterm and short-term buyers that jumped into that towards the close. You know, they pre-positioning for the start of the new year. NASDAQ was far worse overall, but pushed back up towards this 23% in a strong magenta lead there, and that orange falling pretty quickly. So that crosses blue-green, and you get some movement of the red. That would be enough to give a sustained run. Otherwise, for now, if there's any pivot up, we're looking at staying within the lower ranges, and that's the same true for the market. Here's the bond bloodbath for the year. I mean, you're looking at a situation. We went -30% from the peaks, and that just showed the level. And even with the false recovery that took place on the expectation the Fed would get softer, uh, when that failed, that just brought things right back to it. So, carnage in a lot of different areas. Oil, even from its peak too, was off significantly, but still we're over 80 on that, which is elevated. Is going to continue to put pressure on things, no question about that. And from a gold standpoint, still riding towards the middle upper portion of where it had been, but I think it still has quite a ways to go. And I think there's a lot of reasons why it will continue to have fits and spurts, but it's still going to end higher. The euro, of course, as expected, making that giant run. And it's going to continue unless something changes as far as the Fed providing liquidity in that, or if oil shoots up too fast, too quickly. But none of those situations seem to be taking place. For all you crypto lovers, here it is. Bitcoin off 63% for the year. Of course, in December, we had that sell signal up there around the 63K mark, and we're at 16. So, yeah, that's painful. And even from the start of the year, also significant. So it was not good. And I just not a whole lot of situation setups right now that would justify anything significant happening simply because you still have that uncertainty. That was ETH, same story, and much to go over with there. 50K, we had the turnaround above 50%. Magenta leading was actually earlier, right above the 38%. You could have turned around with that one. We didn't quite have the orange dip below at that particular stage, but it was a strong enough turnaround signaling wise that justifiable, but even waiting, at least getting out of the short as covered before, was definitely important to do. And here we can see from the previous day of that Thursday evening, the collapse continued. Pretty much was a soft fade throughout and then broke down to the lows at the second algo level. Isn't it amazing how beautiful that is when it does it just to the algo level? And boom, right up to the other one. And that's right where we finished. Slide it right there. Just broke last few minutes post market, all on positive extremes, as you can see. So, won't be surprised to see that fill back into place. Probably set up a new uh, set of algos that'll be somewhere in that 45 range. We'll see how that plays out, but definitely there was some move to get back into things, and literally it's going to become a question of bigger corporations and their buybacks and whether or not they're really feeling the need to condense and modify given their expectations for continued slowing of the economy. Of course, we saw housing virtually coming to a standstill. And again, some of these things may not really start to snowball until beginning of the second quarter or right as summer's beginning. So we'll see if there's enough of a pause that people will be able to absorb and or have business, adjust to it. And literally, that's where the Fed sometimes gets a little out of control because they're looking at data and they go too quickly, too fast. When if they had started at the beginning of last year, a little bit softer, probably would have been easier on them. But it is what it is. As always, though, we'll continue to follow it. The indicators have been spot on. While we kind of mocked the minus, 20% for the year decline, at the end of the day, we could see what was happening. So there was no real shock in any of it. It was just a matter of the ups and downs with it, and it was a pretty consistent move overall. I didn't think there was anything as dramatic as it is. It wasn't catastrophic from a surprise standpoint, like we've had some shock events. So from that standpoint, I would expect more of that to continue. Probably a lot of people are thinking that things could still be rough, but I think the bigger percentage, if you want to call it deviation, would be positive, strong upside, simply because the negatives are known now, and any opportunity to see positives is certainly going to encourage investors. Because, I mean, when you look at the amount of money lost, it was significant, both in bonds and um, stocks. I mean, you're looking at 30 trillion in value was wiped out, which again, not bad from a Fed standpoint, cuts out a lot of that liquidity, which, we got ways to go, but that helps quite a bit, sucking out some of that exuberance, both in all asset classes, really, from what oil did to uh, crypto and even stocks and bonds. So exciting times. No other way to describe it, but we're navigating it well and continue to follow on the Skype chat and be ready with the indicators for 2023. Here we come. Trade well.